Continue our discussion this morning about data security. Going to a store is something we do pretty much every day. Some people just do it online, I don't know. But the simple act of shopping spurring a legion of data that is often anonymized and aggregated before getting sold. And the end user, often it's hedge funds who are spending $1 billion a year on data that can help them get a trading edge. The web of transactions from you to the hedge fund is complicated, and transparency and disclosure is limited. Leslie Picker sought to untangle all of this, the data supply chain, using the simple premise of shopping for a pair of pants. So you know more about who's profiting off of your data and how.
On your way to purchase something, say it's a new pair of pants. You park your car at the store, satellites from the commercial space industry see you pull up. They sell data about that parking lot and thousands of others to a firm called Orbital Insight. Orbital Insight analyzes these pictures to see where and when people are shopping. They say consumer traffic can give them an early sense of same-store sales and revenue ahead of earnings. But it doesn't end there. There are at least 100 apps, including weather and traffic apps, that are selling geolocation data. A firm called Thassos buys info about foot traffic and then spits out insights like how many customers visited a store in any given day and sells that to investors. When you purchase those pants, companies are tracking that too. Yodlee provides consumer apps to some of the nation's largest banks and often gets access to their customers' credit card transaction history, which it then sells to investors, anonymized, of course. Your emailed receipt for those pants is also valuable. That data is pulled through services like Rakuten Intelligence's Unroll.me. This software rids your inbox of junk, but in doing so, the software gets a look and can gather information about purchasing habits to sell to hedge funds. Unroll.me says their technology can automatically recognize commercial emails and doesn't look at or share personal ones. And if you post about your new pants on social media, you better believe a whole host of firms are scraping through Instagram, Facebook, and Twitter to gather sentiment data about the top retail brands.
There are more than 400 firms collecting so-called alternative data and selling that to hedge funds. Some data sets are more helpful to hedge funds than others, but as hedge funds continue to underperform the market, they're becoming more inclined to use this alternative data, guys.
Wow.
It's creepy.
Really creepy. So I've used Unroll.me before, which got rid of all sorts of extra newsletters and craziness in my email box, but they're actually... I did not know that.
I've used other services that will, combine your contacts from your inbox so that you can stay organized.
Are these free services?
Free services.
Free services.
Hello, what did you think?
Nothing in life is free.
They were doing it to be nice?
What I'm interested in here, though...
No, there's sometimes I think of those... I actually thought that sometimes those email services you think are just trying to get a huge number of users so that they can sell themselves to, like, Google.
You should get a Huawei phone.
Thanks.
And your own 5G server.
There's no such thing as a free lunch. So
when we read all of the analyst preview notes and they say, based on my channel checks, is this what they're doing? This isn't actually them putting out sort of proprietary research and doing surveys. This is just taking this data, which is available to lots of people.
So this data actually isn't available to a lot of people, which is what makes it so interesting and why hedge funds have been spending a lot of money on it. It's really only available to those who can afford to pay for it. So hedge funds are, and different types of data is worth obviously different prices. And the aggregated kind of analyst style, when a company pulls that data and provides you insights as a trader, that actually is worth even less than the raw data itself. And larger hedge funds are the ones who are able to get the advantage because they're the ones who are able to actually pay for this data.
So the JP Morgans and Goldman Sachs of this world on the sell side aren't bothering to pay for this. It's just a few unique hedge funds on the buy side that are.
They're probably paying for some of it, but by and large, it is the larger hedge funds that are using this in order to
How much does this
get an
stuff
information
cost?
So that's a very interesting question. Each data set, obviously, everything is different. The raw data, we weren't able to get an exact amount for each of those firms in terms of how much they cost, but it can cost anywhere from, a couple $100s for something that's on the lower end to hundreds of thousands of dollars for a specific data set.
Can I ask a philosophical question on the table? People talk about inside information, and people also talk about whether the playing field is flat and fair for everybody. And one of the things I think we try to do here at the network is try to democratize this for retail investors and anybody who's out there. But one of the things I worry about all the time when I hear about this type of stuff is I don't put this in the inside information category because it's available to anybody. However, it's not really available to everybody.
Right. Only if you can pay for it.
And that's always been the case. They just
right.
have better information now than they used to.
And so, but
I
this
look back
becomes
when I was a
very
retail reporter.
But this becomes
and
a
they used to be
very
the shopping bag
complicated issue.
indicator and stuff.
It becomes, oh, sorry.
No,
It becomes even more complicated when you hear about exclusive agreements that are signed with some of these data vendors. And that's where we spoke with a bunch of lawyers, and that's where it kind of gets into a legal gray area with regard to insider
Meaning some
trading.
of this information is only available to certain investors.
Yes, and a data vendor will say, you know, hedge fund X, we are signing an exclusive agreement on foot
Right.
traffic to, say, Macy's, and we are only giving you this data that we see. Now, one could argue that the data is faulty anyway, and it's not accurate.
That's what I would say with
not
any
really
of
the
this
point,
stuff. Look, I don't think this is any different than what's always happened on Wall Street. You're always going to have people who have an inside edge, people who spend more time researching. Before you even had the internet, you had people who would have to do the legwork to go find the documents in libraries or go look up the
100%.
SEC filings on all of these things
100%,
before it was so
but
easy.
the distinction between one person doing the legwork that anybody can do, meaning that if my mother really wanted to do the legwork and stop what she was doing and go and do it, and she wanted to stand outside of Macy's herself, that's one thing. It's another thing if it costs $10 million a year to get the satellite information, which she can't get. It's just an interesting philosophical
I totally
question
I don't even know how
about.
accurate some of this data is.
It's
though.
not
That's what I
about
would
all
question
of
with
it.
it.
That's still not having access. I totally agree. I think it's not crossing any red line.
No,
But
I'm
I
not
agree.
suggesting it is.
It's an interesting
I'm just saying
question.
it's an interesting issue.
Yeah.